Hi and welcome. My name is Victor Hagberg. I'm an analyst here at Danske Bank. With me today, I have the CEO and CFO of Surgical Science, Gisli Hennermark and Anna Ahlberg. So the floor is yours, and we'll do a Q&A afterwards. Welcome.
Thank you, Victor. My name is Gisli Hennermark. I'm the CEO of Surgical Science, and I have with me today Anna Ahlberg, who's the CFO. Surgical Science vision is that everyone on their way into the OR should know that the surgeon has trained and been objectively certified in a safe simulated environment. And this is something we've been working with for more than 20 years. And for a long time, we've been very much of a research company developing VR simulators for these surgeons. And as you can see in the picture, being a surgeon working with keyhole surgery, you are constantly working with your psychomotor skills, your technical skills, your hand-eye coordination, your sense of depth, and the muscle memory in your hands. And all this can be practiced in a simulator. So just as an airline pilot, of course, is practicing tricky situations in a simulator before flying people, all surgeons should work on their technical proficiency level in a simulator environment before they start working with patients. And this is something we've been doing for more than 20 years. So when our CTO started talking about VR simulation 20 years ago, it was hard to Google it because there was no Google. So after this long initial phase of research, we are now very much a commercial company, and we have our business organized in two different business areas. One business area that is where we started, which we call educational products. Those are our own products where we own both the hardware as well as the software, and we bring those products out under our own brand name to primarily the surgical residency programs. So these are primarily for surgeons that are under training to start working as surgeons. But in the last few years, we have also ventured in to what we call industry OEM. And that's the part where we are able to license our technology, primarily software, but can also be hardware components, to the med device companies that are then incorporating this technology directly onto their own devices. So it's a little bit of a Intel Inside strategy where we are embedded in the med device companies' products. And those are typically done under white labels. So we're under the hood and the med device company is promoting their own products. These two business areas have a great overlap because it's built around the common IP, so it's the same technology that's being used in our own educational products, as well as what we base the med device companies' simulation products on. And we also find increasingly that the key opinion leaders that we deal with in educational products that are interested in patient safety are also the same kind of people that gets involved from the med device company sides. So there is a lot of overlap there where the device companies are interested to hear what the key opinion leaders think. The key opinion leaders are interested what the med device companies are doing. And we can use the same development organization. If we look at the actual product range and what these products looks like, these slides display our own educational products. And from the left, if you look into the left side of the picture, is LapSim. So that is a laparoscopic simulator. So it's a simulator to practice your technical skills for keyhole surgery, and that's our flagship product, our main seller. We also have a simulator that we launched 5-6 years ago that's called EndoSim, and that deals just as LapSim deals with technical skills for laparoscopy. That simulator works with technical skills for endoscopy. So it's when you do upper GI, so investigation and therapeutics into the internal tract, or lower GI colonoscopy, and also for the lungs, bronchoscopy. And it's the same thing there. You need to practice your technical skills because it's technically challenging to learn how to do these procedures with patients. And then we have a couple of other products assessing the same kind of need. We have a symbol box that works with real instruments, but again, it has the objective measurements, the objective feedback, so you can actually see what you are good at and where you need to improve. We also have a sibling to Lapsim called Lapsim Essence, which is a portable simulator, a stripped down version that we sell as a SaaS service rather than selling the actual simulator. And we have a simulator for team applications, so not focusing so much on the technical skills, but working more on intra-communication and teamwork. All these products are, from a regulatory point of view, educational products, so you do not need any regulatory approval. They are all very validated, so there's been a lot of validation studies during all these years where our customers have validated the software and published articles in British Medical Journal, Annals of Surgery, and other prominent papers, academic papers, showing the transference of skills, that when you work on a simulator in your training, you do better in the operating theater, in the OR. These products are to a large degree software dependent. I mean, that's where we make the majority of our own investments and our R&D. So we keep on making the simulation by itself better, and that has to do with graphic cards that can perform a higher degree of calculations per minute and so on. But we also add procedural content. So we add different clinical areas to the software. So when we sell these simulators, the educational products, they come with a basic skills package, software package, and then you can add on. So just as a game console, I guess, like a PlayStation, you have a console, and then you can add on software as you go along. So there are some upsales opportunities once you have an installed base. Moving on, and I'm just going to show you a quick video here because I think it's important to understand what this kind of real-time non-linear simulation looks like. So here you see down on the left-hand side, you see the simulator, and just as you saw in the first picture, the surgeon is holding on to the instruments in the OR, looking up at the screen, and then trying to rescale in his or her mind the movements in the hands and how that transponds to what you're doing with an organ. So right here we see a cholecystectomy, and here is really the key asset of surgical science. I mean, this is the really when you come to the core of it, it's the physics engine and it's the software that makes this possible to do realistic interaction between an organ and an instrument and make them behave like they do in real life. And of course, these clinical areas like a cholecystectomy or a gallbladder, or if it's an appendix, that is generic. So that you can then reuse with industry OEM customers that are having needs for their med devices. So then we can add on instruments to this already existing software. If we take a step back and just look at the sort of key macro trends that are driving our business, it is definitely the increased focus on patient safety. preventable medical error is a huge problem. I mean, there is lots of people dying. It's the fourth, fifth main cause of death is preventable medical errors. And this is becoming a higher and higher focus on this and more knowledge about this. So that's definitely a key trend that's driving simulation. Another key trend is the transition to minimum invasive surgery. From being totally open surgery, minimum invasive surgery is still growing a lot, and that's both keyhole surgery, where less than half of all the procedures that can be performed laparoscopically are being done laparoscopically. So it's still a lot of growth in this area. And if you look at robotic surgery, which is another part of minimum invasive surgery, there is only 2% penetration. So there is a lot of growth that with surgeons that needs to transition from open to minimum invasive, and then they need to have training, and simulation plays a big role there. The third macro trend that we see that really is driving our business, will be driving our business for a long period to come, is the digitalization of healthcare. As industry OEM, as the med device companies, devices are becoming increasingly digital, simulation is easier and easier to implement on already existing platforms. It also provides a lot of data. If you ask any of your surgeon friends, they will all tell you that they know other surgeons that they would not want to be operated by, or would not have their friends and family be operated by. And this is common knowledge. I mean, it is like that. But it's also becoming more and more transparent with data, and that in turn fuels the focus on patient safety. So we think there are some strong underlying macro factors that talks to Surgical Science favor, as we are a sort of a niche company in a niche business, surgical simulation. Looking quickly at the industry OEM, just to get a grasp of that, what that actually is. The most important segment in this part of our business, where we license our IP to med device companies, is surgical robotics. Surgical robotics is, perhaps many of you know this, but some people sometimes confuse this with robots that operate by themselves. And it's not like that. It's a surgeon that sits by a console that's detached from the patient, has a digital interface, controlling the instruments that are on robotic arms. This still requires a lot of training. It's the same kind of principle. You need psychomotor skills, you need hand-eye coordination more than ever, sense of depth, and all this can be practiced in simulation. And as it's a digital interface, the software can be directly implemented on the console. The growth has been tremendous in surgical robotics. Initially, it was a lot of urology, so it was prostatic cancer that was primarily used for. But lately, we have seen an enormous growth in general surgery, where you do appendices and you do gallbladders, etc., with robotic surgery. And this is driven, I'd say, both by patient demand. If you are a man that needs a prostatectomy, to have your prostate removed, you know that the chances of quality of life after the procedure is higher with robotic surgery. So robotic surgery is what you want. And if you're a surgeon, and this is actually a main contributor, if you're a surgeon, you want to work until you reach retirement age. And if you're going to do that, you need an ergonomic way to work. And when you do normal keyhole surgery, it's usually very incumbent positions where you need to look up on the screen, bend over the patients, and so on. Here you can sit at the console and do your work. We have an incumbent, Intuitive Surgical, which is a customer of Surgical Science, but we also have major players like Medtronic, Johnson & Johnson, and one of the most exciting companies, CMR Surgical, that is challenging Intuitive's position. And they will all have simulation. And Surgical Science as a company, we aspire to provide as many of those companies as possible with our simulation solutions. There are probably about 15-20 companies underneath the main player and the 3 tier 1 challengers, so to say. Here's just a quick snapshot of what that can look like. Here's a client of ours from South Korea, and you can see on the console at the very back there is a computer. That computer contains the training solution that you then use the hardware from the OEM to execute. But inside of that computer, it's 100% Surgical Science software. But again, we sell this as white label. We want the customers to be the focus of attention. So when CMR Surgical, that have a couple of pictures there to the left, when they promote their training solution for their robot Versus, which is called Versus Trainer, that comes with every Versus robot, it is again Surgical Science that sort of run under the hood there. But industry OEM is not only about surgical robotics. Also in more traditional keyhole surgery, the instruments are becoming more and more digital. So from sort of being scissors and graspers and more mechanical things, the new instruments that are coming out even contain microchips, and they have all sorts of functionality. And here's just one example of a vessel sealer from one of the major companies that has a lot of intelligence built into it. And there again, as digitalization is taking place, simulation plays a more important role in order to roll out these instruments in a patient-safe way, and in order to pick up usage among the surgeons, because the business models from the industry OEMs are built on usage. And for us it's great, because then we can utilize already existing hardware, as this is not a pure digital solution. We can integrate it with an educational product from ours, and the med device company will pay. We will get increased IP for our educational customers, and we also get a lot of great visibility as our med device companies, like the picture there to the left, tend to use our products in trade shows, etc. So moving on then from sort of general overview of the company and looking a little bit of what are the latest figures from Surgical Science. We recently released our Q2 report, and we were very happy with that report. It was better than expected. And then of course, what were the expectations? And I think we faced, like most companies, a lot of uncertainty as we were making some comments around Q1 time, so early May, looking into a Q2 where we saw market after market close. Sim centers were no longer open for business, they weren't operating. All the focus was on the COVID-19 pandemic. And in that environment, we realized that our industry OEM customers, that were about 60% of our total revenue in the quarter, they kept on doing well in this climate. I mean, the pro forma decrease was just about above 10%. And when I say pro forma, I mean comparing Surgical Science 2019 Q2, including Sense Graphics, which was a company we acquired and that were incorporated July 1st last year. So comparing their figures included in ours, the decrease was just only a little bit above 10%. We had our largest surgical robotic client that went down new units by roughly 35%, but the attach rate, the percentage of new robots that go out with simulation was high. So the total decrease for industry OEM was still only just above 10%, and that also then includes all the customers. There were multiple customers that contributed to the 12.4 million Swedish crowns. And we also notice that in the COVID-19 times, it's a little bit of a paradox, but when you think about it, it makes sense. The companies are focusing on post-COVID-19. So they're focusing about competitiveness once we're through the pandemic. And it's actually easier, we find it easier to drive potential projects forward as the key stakeholders among the med device companies all of a sudden have more time in their agenda because there are no congresses, there are no travel. The 5 days you had crossed out in your calendar for Congress X no longer exists. So that's actually a positive side effect of COVID-19. And if you look in the other side of the business, the educational products, they took a bigger hit. They went down with almost 50% compared to Q2 2019. But still, we had 8.2 million Swedish crowns in sales. So simulators were sold. And to us, that's something that we feel pleased with. The fact that our strong brand name, our reputation, actually make the customers come to us and still wanting to buy, despite the fact that a lot of the sim centers are closed. Budgets are unclear. Hospital focus is on the COVID-19 pandemic, but we're still making sales. So we're happy about that. And US market was particularly challenging. We saw a decrease there. We saw that in Europe it was actually better than expected. So we sold better in Europe than we did last year even. And in Asia we saw a lot of activity. So we saw activity picking up. Customers are asking for demos. There are some congresses taking place. And there are tenders coming out. So we expect sales from Asia in Q3. And overall, it's a little bit hard to see how this plays out in the short term because, yes, there has been a decrease now in surgeries. I mean, there's a lot less surgeries. There is unclarity about budgets. But on the other hand, there is a surgery debt. So they need to get back to doing surgeries and they have a big backlog, meaning that they can't really mess around and work with education inside of the operating theater. So this could actually be a positive drive for simulation. And you have a lot of residents, surgical residents, that haven't received and haven't had the time to do their practical training because it's been locked down. So there is sort of two sides to everything. And now I will hand over to Anna, and she will take us through a bit more detail on the numbers for Q2.
Thanks. Yes, looking at our figures for the first 6 months then a bit more in detail. We showed sales of just above 40 million Swedish crowns. That was an increase with 34% compared to last year. However, as Gisli mentioned, since Graphics, the acquisition we made last year, are included in the figures as of July 1st. So if we look at comparable units, we see a decrease by 30%. The split between the two business areas, educational products, then took a greater hit, and we see sales there amounting to just below 16 million for the first 6 months, approximately 40% of our sales. And industry OEM then accounted for just above 60%, close to 25 million Swedish crowns. For reference, our sales for 2019 was just above 100 million Swedish crowns and pro forma 129 million Swedish crowns. Costs and margins for the first 6 months. We showed a very good gross margin of 85%. Our gross margin is affected by the split between our different revenue types, the portion of those revenues as a portion of our total revenues. We have 3 main different income types. Hardware, where we have a gross margin of approximately 75%. We have within industry OEM our consultancy fees with a healthy gross margin, but not at all as for our license fees that are close to 100%. And so the split, and when we see that license fees increase as a portion of our total sales, we also see our gross margin increasing. Sales cost for the first 6 months was 46% of sales. And looking at the absolute numbers here, we see that they have gone down during the past 2 quarters. And that is, of course, due to the fact that we have not been able to travel, to visit hospitals, to attend trade shows, etc. R&D was 23% of sales, and we activated costs of just below 7 million Swedish crowns. That also varies between the quarters, depending on what we are working with. And for the first 6 months this year, we put a lot of resources into our core technology, and we activate more costs there. Depreciations and amortizations have gone up, and that is mainly due to the acquisition of Sensgraphics, where we have 44 million Swedish crowns attributable to customer contracts that we amortize over 10 years. And also some IFRS 16 effect, where we have prolonged some rental contracts during this period. EBITDA, we have one of our financial goals is that we should have an EBITDA margin of above 40%. And for the full year 2019, we had a margin of 30%. However, for the third and fourth quarter 2019, the margin was 43%. And for the first 6 months this year, we showed a margin of 22%. Finance net and cash flow. We do not have any loans in the group, and so therefore our finance net is all due to exchange rate fluctuations on internal receivables. Cash flow from operating activities was slightly negative for the period, and looking at the components there, we see that change in working capital was minus 11 million Swedish crowns, and that's mainly due to a buildup of our inventories, partly because in the beginning of COVID we bought more components than we just to make sure we could deliver, and then also now during the second quarter it's due to the fact that we have some long contracts for critical components that we have not been able to postpone or cancel. Cash flow from investing activities is mainly software development, the costs that we activate. And cash flow from financing activities for the period was positive, mainly due to 2 options programs. One that was closed in Q1 and another one that was initiated in Q2. So we are very happy to be able to say that our cash position during these difficult times remains virtually unchanged. If we look at December 31st, before all this started, and then comparing to June 30th, we see we have a cash position of just below 70 million crowns. Our balance sheet remains strong. Gisli, our financial goals.
Finishing up here a couple of slides before then we hand over for questions from Victor. We have financial goals to have 400 million Swedish crowns in turnover 2024. And like Anna mentioned, an EBITDA of at least 40%. Setting these goals, we also recognize that might include some complementary acquisitions and is built on educational products growing on average 15% during this period of time. And industry OEM will overall have a higher growth than that, even though it can be a bit more lumpy as part of the business model is based on consultancy revenue when we implement or integrate existing softwares in surgical robotic platforms, for example, and then license revenue from based on volume among the customers. We also have a dividend policy, but we don't plan any dividends for the coming years. Focus is on growth and increasing our strong position in especially surgical robotics, but also other industry OEM segments. Just a couple of comments around COVID-19. We have not had any furloughs, so everyone has kept on working 100% at Surgical Science. Of course, we get some benefit from lower general payroll tax or social security tax in Sweden. And we looked into some other financial support that is available due to lower turnover. But so far, the effect has only been about 0.9 million in our figures. We are hoping for educational products that the activity level will be coming up to more normal levels. That was sort of pre-COVID-19 levels. But there is some uncertainty also how the long lead times and the lack of being out at congresses, meeting new customers, etc., how that will actually play in and for how long. When it comes to industry OEM, Q2 was, in our opinion, very good for us, but we're still, it's one quarter, so there is still uncertainty for Q3, Q4, the fall, how this will play out. But Q2 was encouraging, and then in the medium long term, we feel very confident about our sales growth and targets. And also one thing that we have really learned and recognized in the last few months is that the brand and reputation and contacts that you have as the best technology provider in surgical simulation is more important than ever, because it's easy to start a video meeting with someone that you trust and someone that you know, and we are that partner to a lot of these med device companies. So even if COVID-19 is bad for business, I actually feel that we will come out relatively stronger on the other end of this. So that was what we had in terms of a presentation. So I guess that should leave it plenty of time for some questions, Victor.
Yeah, absolutely. So thank you very much. I'd like you to go through some of the drivers for mainly robotic surgery, but minimally invasive surgery in general. You touch upon the ergonomy side for surgeons and the patient safety for patients, but there are other drivers as well, but we know that they're not going to be regulatory. So could you go through the potential drivers for an increased adoption going forward?
Yeah. No, the biggest, no doubt, driver overall away from open surgery is that if you have a procedure, if you have a hysterectomy, for example, you're a woman and you're having a hysterectomy, you're looking at spending 3, 4, 5 days in the hospital after an open surgery, with increased risk of blood loss, infections. So it's both a matter of patient well-being, but it's also a matter of cost and a socioeconomic cost. So that really drives the healthcare systems to minimum invasive surgery. So I say that's the main driver, and then surgical robotics is an extension or an innovation on top of laparoscopy. So and again, like you mentioned, the surgeons wants it, the patients wants it, both from a point of view that you stand a better chance of having a better outcome, but it's also things like if you're having a hysterectomy, again, if we take that example, perhaps instead of having a big scar across the stomach, the bikini line will actually look much better if it's only 2 small incisions or 3 in that case. So there are main drivers for this, definitely.
Do you think there's going to be any drivers from a cost-saving perspective and risk minimizing perspective from the hospitals, and that's going to be driven by their insurers?
Yeah, I think there is some of those drivers, especially for the potential complications of open surgery. So I think we will see, just as we saw in the slide of surgical robotics, where they started in one therapeutic area, but it quickly spreads to different ones. I think we will see continue seeing that trend of increased usage for minimum invasive surgeries.
Okay, so looking forward a couple of years, currently revenues from your OEM customers are going to be a one-time license fee. You have some SaaS revenues from some of the older products, but that's not really material in terms of the group. Where do you see revenue models going forward? Do you see an increased recurring revenue share, or where do you see revenues coming from in a couple of years?
I think as new entrants are coming into surgical robotics, I think there will be much more of usage-based business models. I think the customers will, to a lesser degree, own their robots. I think there will be more of OpEx rather than CapEx for the end users. And of course, we are a supplier to that industry. So I think there could definitely be, and perhaps already are, some discussions about more reoccurring revenue models. At the end of the day, what's important for us is that we get paid reasonably well for the value we provide. And the value we provide is very established. So if you get that as a one-time fee or you get it spread out over time, it really depends on how our customers' business model will look like in the future.
And in terms of the upselling potential, you touched upon it a bit, but the upselling potential within both of these segments that you have, and the potential implications on pricing. Do you see anything that's worth highlighting in terms of pricing from an upselling perspective?
Yeah, I think there is a lot of opportunity to add content to existing customers, both in educational products, as we come out with we're working right now on a colorectal project, for example, to add colorectal surgeries to our educational products, but even perhaps bigger upside to keep on adding content to existing customers in industry OEM. And also our customers are not they're not rolling their thumbs. I mean, they're investing a lot in R&D, so they will have new instruments coming out, and then you need training on those instruments, and that's another opportunity for us to provide our customers with that simulation for that training. So I think the the equation is really, number of volumes, number of robots coming out from one of our customers, attach rate, how many are equipped with simulation, and then the final component is revenue per robot, which is driven by the amount of content and value we can deliver into the simulation package.
Okay. Anna, you touched upon that you have a net cash position, around 70 million SEK. In the Q2 report, you also were hinting towards potential further M&A, in addition to the acquisition made last year of Sense Graphics. Could you talk about the M&A opportunity? What are you looking for? And what is your matrix, so to say, when you're evaluating potential targets?
We are looking for 4 things. Number 1, customer relationships. Number 2, technologies, complementary technologies. Number 3, we're looking for highly talented software developers. And number 4, we're looking for application areas that we are currently not in, but where we see synergies with our current application areas in educational products, which is endoscopy and laparoscopy, as well as industry OEM demand for those application areas.
Okay.
I don't know. Did that make sense?
Yeah,
So,
sure.
so-
Absolutely.
Yeah.
And this is an adjacent area in terms of competition and procedures to add and potential targets. What do you see in terms of competition, both directly and indirectly from OEMs insourcing or maybe doing it themselves, the simulation part?
Yeah, we are in a niche business, so there are very few companies that can deliver this kind of high quality real time simulation in our niches. Then of course customers could decide to do or try to do more things in-house, or as my CTO says, in theory they could, but remember, this is a very niched competence. It's developed over a 20-year period, and especially the physics engines, it's validated, so it comes with credibility, and it's not a huge part of their COGS. So I don't really see the big rationale for that. We're not extremely concerned about that. But of course, they could have some, maybe for easier simulation, some in-house competence.
Okay. And your 2024 targets, they could include M&A, but they also are built on further client relationships than you have currently. And speaking of that, 2 of the large potential tier 1 OEMs, MedTech and J&J, they're going to be a bit delayed entering the market with their robots. What does this imply for your revenue opportunity? I know they're not clients, at least you have not disclosed them as such. And what would it mean for your incumbent customer, Intuitive, which is the largest one currently in the market?
We're not extremely concerned about it because, like you said, we are doing a lot of business with the incumbent. We're doing business with, I guess, the most serious contender that's already launched, CMR Surgical. So perhaps that makes the business opportunity among those clients a bit stronger if the other ones are delayed. Of course, our goal is to supply as many of these surgical robots companies as possible with our simulation technology. I guess the only drawback is that perhaps the more suppliers that come to market, the faster the overall market will grow. That's at least what I think. But we're not overly concerned about that, as we are with the customers that are already in the market.
Okay, and speaking of the opportunity of signing more customers, there are no exclusivity agreements with current customers, or how are those contracts set up? Can you say anything if there are any proprietary things that they can keep and that you won't be able to use with others, or is the tech fully yours and free to sign as many customers as possible?
The technology is fully ours. I mean, we retain IPR to our technology, but of course, we as we work with competing customers, we're extremely careful to keep it divided, and we have some, in a way, some clean teams that only work with certain customers, and then the vast majority of what we actually deliver is the clinical environment and the realistic interaction and movements of the gallbladder or the appendix or etc. But then, when we add in the customer's instruments, that is proprietary for our customers. So there are sort of a core asset that we keep on improving, and then there are slight versions of this to different customers and instruments that are unique for each customer.
Okay, I think that was it for me, actually. So thank you, Gisli and Anna.
Right. Thank you.
Thank you. And that concludes our small and mid-cap seminar for this year. Thank you very much for watching.